Good morning, traders. It is Sunday, December 1st. There are so many gurus on the internet and on YouTube in particular. How do you know who to trust? I go through the same process in all of my videos. I start with a review of my previous picks. So you get to see how the stock that I highlighted a few days or a week ago has fared. Then we go through and do our market analysis, and then we go and we find a new pick for the week. I'm not photoshopping any kind of financial statements or any kind of trade logs. I'm giving you the trade, something that you can actually act on. What better proof is there? If you like my picks and you've done well on them, please do me a favor and click the thumbs up button. Please subscribe to my YouTube channel. My goal here is to educate as many people as I possibly can. That's it. Some people are going to think that I make a ton of money off of YouTube revenues. I make a couple of $100s a month. It doesn't even cover the cost of my thumbnails. So I'm really doing this to give back to a community and to share my passion with other people. That's it. Yes, I do sell trading software. Yes, I do have a chat room. But you don't need any of that to be successful. You can take advantage of the free content that I'm putting up on YouTube. So please let other traders know you're in other trading circles, other trading communities. Please share the experience you've had watching these videos with others. So enough about that. Let's take a look at our recent picks. COF. I gave you that pick a week ago, Sunday. Let's take a look at the 15-minute chart so that we can zoom out a little bit. That was the price action last Sunday when I recorded the video. So you can see this is the price action that we had through the course of the week. Actually, I need to take that back because we had a holiday in here. So this is Friday, Wednesday, Tuesday. This is Monday's price action. This is actually where the video came out, but still really nice gains. This stock has rallied from approximately, let's call it 187 to $192 in the span of a few days. Wednesday, we did a live event, and the stock that I highlighted was PLTR. Live event was right about in here. You can see how the stock finished higher. I'd also advocated waiting for a buy signal, which kind of coincided with that same price level. In either event, the stock has been moving higher. I like it on a day trading basis, but I also like this stock on a longer term swing basis. All of the picks that I highlight for day trading, I have to like on a swing trading basis as well. That's what gives me the confidence to take the position. I've got the wind at my back on a longer term basis, and now I have a shorter term trade setting up as well. So it's very, very important to always have that D1 context in mind. PLTR was one. AFRM was actually another stock that I liked during that live event, and that one actually has fared a little bit better. I didn't know which of the two I would want to pick. You can see that during the live event, which would have been here on Wednesday, I liked everything. We had touches on a horizontal support level. The stock had been strong. There's your multiple touches along that same support level. I like this bounce here. So AFRM was very nice entry in here. And then you get your follow through on Friday. You can see how the stock is bumping up against resistance right now. So we want to see it break out on good volume, and then it has a chance to continue higher. Let's take a look at that D1 chart. You'll be able to see how the stock has been pushing higher, and it's gotten through this longer term D1 resistance level, checks AV WAP E, and it's off to the races. We'll put up PLTR very quickly, and you can see that's a really nice longer term chart. Buy dips. Okay, the stock is getting a little bit extended, but that doesn't mean that it's going to roll over. That doesn't mean that it's a short. It means that we are trying to time our entries and we want to join this longer term uptrend. So we set alerts to do that for day trading. So that's the backdrop right now. And this is what the overall market has been doing. And, I've been told, Pete, you should never criticize traders, okay? Because you're doing these videos and you want to bring as many traders as you can into the fold. So be kind to them because there are a lot of people that are out there learning. And, I've posted a lot of comments, be it on Twitter or on Reddit. And I get comments back from people and they say, you told us that the market was going to go higher. Oh, so what's the big deal about that? The market always goes higher. There's nothing special with what you do. That's a valid point. Trade the freaking trend, okay? These very same people are out there telling me that I'm wrong when I'm saying buy the dip. They're saying, no. We need to be shorting here because this market's doomed. It's rolling over. And so I've been telling you, once I saw the extent of this bounce here, this is back in August, that this was a sign that buyers were still engaged. We need to see a lower high double top that would struggle to get through AVWAP-Q and the 50-day moving average. And then if we rolled over, that would be a sign that sellers are aggressive. Wham, wham, wham. They are seeing this little bounce as an opportunity to get short. We didn't see that. We almost rallied back up to the previous high. This leg of that bounce told me, hey, buyers are still in control. So we get another dip in here. Now this turns into a cup and handle formation. Buyers are even more aggressive here. Doesn't even get to the 100-day moving average, and they are in there scooping stocks. Long bullish hammer. So we test that low, bounce off the 100-day moving average, above it in fact, which is even more bullish. And then we get this big bullish hammer, gets above the open of this long red candle here, and we are clearly above the 50-day moving average. So it is all systems go at that juncture. From that point on, I have been in buy the dip mode. Please go back and watch my videos. Confirm that what I'm telling you is the truth. So on every one of these little dips, just like here, no, we're going to be shorting this. No, we're going to be shorting this. No, we're going to be shorting this. And I tell these folks, listen, don't try and fight me. Would you just try and learn from me? Get with the program here, okay? And so what, your method is better because you're getting short here and then you're somehow going to dismiss the gains that we've made post-election? Like, oh, this doesn't count. My shorts here where I got my ass handed to me. Oh, that was clever. That was the right move. No, it wasn't. You lost freaking money. Look at the market. Push, push, push higher. What did I tell you in here? Buy dips, buy dips. We had a great opportunity right here to add on this dip. And so please go back and watch my videos. Confirm this. We had a breakout to a new all-time high. We had gotten through this horizontal was resistance level, now support. Wham, 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 wham. 4 tests of that breakout, and we could not penetrate it. That told us the buyers were supporting this pullback. Buyers are not going to chase new breakouts to all-time highs. They will buy dips. So we've got our confirmation. We're adding to swing trades here. Took an initial long on a swing trade here, added to the position here when this support was confirmed. on that breakout. We were waiting for the next dip. We get the next dip here. We're adding once we confirm support at the 50-day moving average. You didn't have to add ahead of the election. Okay, see how that plays out. But I had mentioned to you that the odds of moving higher after the election were very high because we tend to get relief rallies. Almost all of the post-election reactions have been to the upside. And this was no exception. So the market gets a little frothy in here. You got the Fed cutting interest rates. That's good news. So market gets a little ahead of itself and it pulls back and it checks the breakout. Beautiful entry point to add to swing positions. Great place to sell some out of the money bullish put spreads. Not here, not where we closed Friday, where we were a week ago. And what oftentimes happens is that everybody is in buy the dip mode, buy the dip mode, buy the dip mode. And then you get the dip and you go, ooh, I don't know about that. This is looking pretty weak to me. This could be the one. This could be the one where we keep going down to the 100-day moving average and maybe the 200-day moving average. And they don't buy. You got the dip. You got everything in place. You have your longer term upward sloping trend lines. You've got a favorable macro backdrop and you miss the opportunity. And before I took time off on Friday, I told members in the live event, go back and watch it. By the way, please watch those live events because they've got so much great information in there. Harry and I answer all your questions. So chances are the same questions that other people have, you have. Please go back and watch it. I think you'll find it to be very educational. And plus, we flip through charts. You're asking us, what do you think of this stock? What do you think of that stock? I think it's very enlightening for you to see what our thought process is and the technicals that we're looking at. And we'll give you an answer. If we like it, we'll tell you why. If we don't like it, we'll tell you why. In fact, AFRM came from one of the attendees during the live event. It's a really nice stock pick. So the point is that we are going to continue to see a very light volume, check that right here, light volume rally into year end. Economic releases have been good, and we got a lot of economic releases coming out this week. We've got ISM manufacturing coming out tomorrow morning. We have JOLTS on Tuesday. We have ADP on Wednesday. We have ISM services on Wednesday. We have the jobs report on Friday. We have the beige book in there. We've got all of the official PMIs from across the world coming in. So lots of economic news. What's my takeaway on all of that economic news? I think it's going to be fairly good, very solid. ISM services has been coming in very strong. 80% of our economic growth is tied to the service sector. ISM services, very important number. It has been coming in really well. So we got another look at GDP for last quarter, 2.8% growth. Excellent. Initial jobless claims. They've been averaging on a weekly basis somewhere around 215,000 for the last 4 weeks. Those are good numbers. Really solid. We had a light jobs report a month ago. Much of that was caused to the storms. The storms have passed. In fact, there are probably going to be jobs created because of the storms. We have to go through reconstruction. We also had strikes that impacted the jobs report. Those strikes have been resolved. So those won't be factored into the number. Even if we get a crappy jobs report below 100K, which I don't believe is going to happen, we have the Fed standing by, ready to ease. They eased 1/4 point a month ago. They don't have to fight inflation like they've had to fight in the last year and a half. They have the latitude to ease if they want to. And if the jobs report comes in a little bit soft, perhaps they will. So right now we've got all of these factors pushing and fueling the market higher. Not in a dramatic steamroller, go, gotta have it fashion, but in a stair step fashion. We rally up, we make a new relative high, creep, higher. Okay, tiny bodied candles, take a little risk off, expect a dip. You get the dip from a longer term perspective. You're looking to load up here. All right, grind. We've got a new relative high. Ride that wave higher. Start to see some red candles, some signs of resistance. Reduce your risk. Wait for the dip. Dip is coming. Get the dip. Bounce off of a major moving average. Dip is brief and shallow. Confirmation that the long-term trend is still up. Look for entry points to get in on this dip. You've just gotten above the opening of this long red candle. You've just gotten above AVWAP-Q. You are in this gap. This is your buy point in here. Then you get your rally up and we start stalling out. Okay, take a little risk off. Wait for the dip. Load up here. So on a short-term basis, if you're a weekly options trader, you're doing your credit, your call debit spreads in here, okay, on the bounce once it's confirmed, knowing that you're going to get some impetus for the next few days, maybe the next week. Take your gains. Wait for the next one. This is your sweet spot. Take your gains. Wait. This is your sweet spot. Take your gains. Wait. This is your sweet spot. If you're a longer term swing trader, you're just building and building and building onto the position because you don't know where this is going to end. It could be at S&P 7,000. We don't know, but we know that we want these dips to be brief and shallow. These are our confirmation points, and these are our points where we add those longer term positions. And you do so with the confidence of knowing that when this trend, this very strong market trend, when it's going to be done, you're going to get a pullback, you're going to get a retest that almost gets you back to the high. You make a lower high, double top, and because you're close to where the market had previously topped out and you can't get back to that high, this is where you take your gains. And even if the dip is deep like it was right in here, you're going to get back close to the high. That is when you start taking profits. This is a good example, so let's go take a look. Look at this market rally here, okay? You're buy, all the way up, okay? Now you get your first really deep trough in here. This dip is deeper than the rest, and it lasts longer than the rest. And this is a weekly chart, by the way. And now you get your rally up, okay? Uh-oh, we're well short of that high. And I got a bearish hammer in here, and because this was deeper and it lasted longer, I know that I have to be more cautious. So this is where I take my gains on my longer term swing trades. Notice how this is still very close to this. So all in here, I'm not guessing that that is a market top and that we're going lower. I'll wait for the rebound. Oh, we made a new high. All right, now I've actually got confirmation. I can add to my swings, add to my swings. I'm not guessing that this is a market top, okay, because we make a new high. And so you could be playing guessing games that, oh, the market's so overextended, it's got to roll over sooner or later, and you're missing the majority of the move. So to those guys who have been out there fading me, saying, no, I think the market's going to roll over, you are eating crow, you are losing money on the way up, and you're not making money. And then you tell folks like me, what's the big deal? The market always goes up, so it's not like you're some kind of genius. You can't be a genius. Ride the trend, okay? Don't fade the trend. Don't be out there looking for market tops. These are just tiny little dips. These are opportunities. This is not a roadblock. This is an opportunity. If you're up here buying call debit spreads, okay, you're going to lose a lot of money because you didn't give yourself enough time for the trade to work out, for one. For two, you didn't recognize the market after a breakout like this was going to see some profit taking, and that your opportunity was in here, up in here. You have to reduce your short-term trades, wait for the pullback, and then reload. That's how you trade this market. And you set alerts so that when you get these drops and these pullbacks and the stocks rebound, you get an alert, and you're not even having to monitor the stocks or the charts. You're just getting alerts, and the market finds support here, starts to rally up. Alert, alert, alert. So all these strong stocks are brought to you on a silver platter. All right, so let's get on with it. What's the market going to do? What do we need to be fearful of? Well, we do have Donald Trump coming into office in January, okay? And there's going to be some comments that leave investors and longer-term asset managers a little uneasy, but he is not taking office until January, so those are going to be little speed bumps along the way. What we can expect is asset managers like to mark their portfolios up into year end. They have more assets under management when they do that, and that means that their asset manager fees are higher. So the market has a tendency, it's an anomaly, it tends to rally into year end most of the time. And there's just a lack of sellers. So the volume is light and it just floats higher. There's not a lot going on. And what that means is that ultimately, as you make a new high, which we did on Friday, we can expect a little bit of an extension here. Maybe it lasts a week, but as the candle bodies start to get smaller and smaller, we know that on light volume, we should prepare and we should expect what? We should expect this. We're going to get some profit taking. We're going to get a pullback. So if you're long in here, you might have another few more days left. A week, you're kind of stretching it, and you don't want to have like a long, giant green candle. There's nothing to justify a move like that. I had mentioned to you that asset managers are not going to be chasing. You'll have some adjustment in here because there are people who would have been shorting in here that have to cover their positions, mainly options premium. They're call sellers in here. And so now they're having to buy those calls back. So it does create a little bit of upward impetus, but not that much. So look for this move to last maybe through the week. We want to grind. We don't want any big liftoffs. I'm not expecting any. You get a big gap up Monday morning after a rally on Friday, a holiday shortened day. You should be very skeptical and very cautious because gaps up to a new relative high are faded. And there's a chance for a gap reversal. Anything nasty? Probably not, but it'll set up a little bit of a pullback. So do not chase gaps higher at this stage of the game. All right. In here, we could chase that. We're just coming off of a dip. So there's going to be a pretty good tailwind for us. But at a new high, don't chase those moves higher. The moves that typically happen on Black Friday are reversed Monday. So watch for possible little round of profit taking Monday. Gaps down are our best scenario right now, because when we have that gap down, we will instantly find support. And if the market rallies right into that gap, that overnight gap down, if we rally right into it, right on the first, let's say 3-4 bars of the day, that's a good sign that we're going to fill most of that gap. Gap reversals give us a great entry point to join that longer term uptrend. All the stocks that looked super good last Friday, last Wednesday, they might pull back just a little bit. We want those stocks to hold their own. We don't want to see big pullbacks in them when the market has a gap lower. As soon as the market finds support, that's our opportunity to enter, look for a market gap fill, buy those stocks at a relatively good price, ride that move higher, and then we've got that gap fill fueling the move higher. So in your mind right now, you should be thinking, gap up, no bueno. Do not chase. Wait patiently. Gap down, excellent. Let's look for those stocks with relative strength. They're going to be easy to find because market down, stock flat, that's relative strength. Market down, stock up, that's relative strength. That stock gets through the prior day's high, bingo. I got my stock. Heavy volume, awesome. Breakout through any kind of technical resistance level, D1, beautiful. Stock above prior day's high, yes, fantastic. Checkbox, 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 checkbox. That's how you should be trading right now. So let's go find a stock. I'm going to go right to my searches. I'm going to go right to shop. Love it. Stock looks great. Big gap up through major horizontal resistance. Stock preserves almost the entire gap up. Stock pulls back below AVWAP-E, tests EMA 8, and rallies through it. Now it's above AVWAP-E, and it is likely to push through this horizontal resistance level. I like shop. So you can see how we have all the ingredients. Why did the stock gap up? Because analysts liked the earnings report. Earnings before the open, that's what the B stands for. Look at that relative strength. I would like to see more volume, okay? But right now, we're kind of dealing with a low volume environment. Take a look at the 5-minute chart, see what it did on Friday. You can see the market was up. The stock also floated higher, closing near its high. Take a look at the 15-minute chart, get a feel for what that's doing. And you should always go back and take a look at what type of price action the stock has been displaying. And so if I see shop gapping higher, I should go back and see what shop has done typically when it gaps higher over the course of the last few weeks. At very minimum, the last week. Well, look at this choppy, chunky price action. Rallies up, pulls back, rallies up, pulls back, rallies up, pulls back. All right. So what does that mean? That means you don't chase breakouts to a new high for the day. You right-click, you create an alert, select trade signal, let's use M5, save, right-click, create alert, trade signal, let's use M15. Let's use them both, okay? If you wanted to, you could use any variety of variables, 3/8 crosses, ADX, compression breakouts, HA reversals are excellent. Those are super sensitive, and I like to use those when you've got a stock that's really marching higher and it's got some good pace. It's go, 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 go. Very few dips. Well, then you need something really sensitive like an HA reversal M5, and then you can use that to help you with your entry point because it's going to be pretty easy to trigger. And it'll allow you, that's one of the only indicators that'll probably get you into a really strong move higher. Let's take a look at HA reversals, and we'll look at the price action on shop on Friday. There's going to be some HA reversals in there. And so we got a flat top red right there. We got a flat bottom green right there. You would have had an entry point right in there. You would have had an entry point right in here. Flat top red, flat bottom green. There's your reversal. Beautiful. Flat top red. Yeah, let me check 114.23, 114.23, flat bottom green, you're in here. See how sensitive it is? Nice stuff. You get that HA reversal and you're above VWAP. Boom! You got a really nice one. Right click, create alert. I want to know when I have an HA reversal on an M5 basis, bullish, and I want to know when the stock is above VWAP. Boom, boom. Both of these conditions are correct, so I get an alert right now because it's already true. But yes, so if these were not true, when they are true, you would be getting that alert. So both conditions have to be true. When we only use one condition, then the servers know that for that one condition, it's already true, so I need it to go false, and then I need it to go true, and that will trigger the alert. If I'm using one variable, I know that if it's already false, then I need that variable to simply go true, and I'll get the alert. But as soon as we start combining variables, it's going to look for situations where both variables are true, and it'll give you the alert only when both conditions are true. So in this case, they were both true. They didn't both go negative and then both go positive, true. So we have to, it's much more tricky for us to be able to use that type of logic when we have two variables versus one variable. I like SHOP. I've set my alerts on it. I think that this stock has already proven that it wants to go higher. We are adding to this nice little bounce after that beautiful gap up has been preserved to a very large degree. Stock got a little bit ahead of itself. There was a little bit of profit taking place on that big post earnings move. That profit taking ran its course. Bye, 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 bye. Buyers are getting more aggressive. They're getting more aggressive. And there are fewer sellers. Hence, the stock starts to float higher. I like SHOP. So this week, we've got lots of economic news coming out. We've got a market that's likely to float higher. We got probably a few days left of nice market movement to the upside now that we've broken out to a new high. So if we get a really decent rally off those economic releases this week, watch for those compressed tiny bodied candles next week, a week from now, and know that you probably should take some gains. Not that we're looking for a big drop, but we'll probably get another one of these little dips ahead of Christmas and then another nice little push higher into year end. That is how I see the market playing out. Again, if you like this content, please give it a thumbs up. Leave your comments. Leave your comments. Let me know what you think the market is going to do once Trump takes office. Do you think the market's going to sell off, or do you think the market is going to continue to grind higher in January? Please don't make it political, okay? Just use price action and let me know if you feel that valuations are stretched or whatever your reason, but don't, put tariffs and everything else in there because we're not economists. We don't know what's going to happen. So leave your comments. Thanks so much for watching. We'll be doing a live event on Wednesday. And actually this week, I do want to make mention of this because this is kind of cool. All right. Everything that I do, it really doesn't matter that I know how to trade. It means nothing. I could just go crawl into my cave and do that. That's what most good traders do. They don't share anything that they have learned with anyone else. They just keep trading. I want to share all this information, and I've got lots of members who come into the chat room and use my software. And I had someone contact me and they said, "Hey, listen, Pete, what you do is absolutely phenomenal, and I'm going to keep driving traffic to you because it has helped me incredibly. But I kind of have my own thing going now, and I got my own system thanks to you, and so I'm going to be canceling my subscription." To which I said, "Congratulations, that's awesome. That's all I ever really want anyone to do is be able to graduate." But I said, "How about if we did an interview because I'd really like to learn what your learning process was. I think it'll benefit lots of other traders. Would you mind doing an interview with me and with Harry? And so he said, absolutely. So I think we're going to try and do that on Thursday. It's going to be a video recording. Should be very inspiring to all of you. And we have so many traders who are turning a corner and they are producing great results. So that's what makes all this worthwhile to me. So I hope you can also watch for that recording. Should be done Thursday. I'll try and get it posted Thursday night or Friday morning. That's it, folks. Trade well. We'll see you Wednesday. Thank you.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.